Hey traders, TG Watkins here. It is July 6th when I'm recording this Sunday. I hope you guys are doing well. Enjoy the 4th of July weekend. I hope you guys have all your fingers and toes from all the fireworks out there. And if not, then maybe you guys got to enjoy a good show out there. So we actually got to see a pretty cool drone show. That was the first time for me, but pretty neat. So anyway, this is what we're going to be going through. Remember to like and subscribe, and that this is for educational purposes only. And then we're going to be talking about the futures because they did move, and that's about the only thing that I can do right now until the market actually opens to show you guys kind of what I've been seeing. I'm going to be talking a little bit about how I think that there's kind of been a forced Moxie price trigger for the last week, which was after the Iran-Israel news and that war, and the market jumped up after that. And then, of course, we had the run into the 4th of July, all of that kind of stuff. And then I'm just going to show you guys the indices. And the reason I want to show you that is because they're all kind of doing the same thing, which is overbought. And then what I think will happen about that. And then breadth and VIX in the UVX. I'm seeing some things there that are also very interesting. Then I'll just kind of show you guys a couple other things that I think were notable out there. And then just to kind of put everything in context, the reason why I don't have too much to talk about this week is, well, the markets were straight up and we're not going to know much until the beginning of this coming week. But also I took a lot of profits on most of our positions out there. Yeah, I still have a handful of things. And but what we're doing is we took in a lot of good profits because, well, I'm looking at this market thinking, wow, this thing is insanely high. And yes, we've had our seasonal run into the 4th of July, but then usually after that, it starts to kind of pull back and weaken a little bit. And so this is the kind of stuff that we've had and we've been doing pretty well. Now, the other thing that I wanted to let you guys know is that we're running a special. It's $197 per month. If you guys want to come over to the Moxie Indicator trading room, this is something that we haven't ever done before, and we're also doing it monthly instead of quarterly. So kind of a low commitment. If you guys want to come in, check it out, see how I trade, and if you like those gains that I'm showing you, then come on over. Also, we're going to be doing specials each month for the next 3 months. I'm going to pick out a special something to teach in the Moxie room. It's going to be the Moxie patterns. It's going to be leverage ETFs, and it's going to be longer term trading steps because I do think this market is looking absolutely amazing for longer term. So come on over, check it out. It's simplertrading.com/Moxie-monthly. So Moxie Monthly, and that's where you guys can find me. The other thing, so based on this and everything else that we've been talking about, I also want to show you guys over here that if you guys want to either go back and find the shorts that I made, the one where I was in my car kind of talk about 4th of July rally and seasonality, you can also see some of the past weekly videos that I made. We've been really calling this market perfectly. As far as, we've had the run, the bullish run, that was good. We had our price targets, that was all great. We've had a couple butterflies up to 6,100, those worked. We had a put credit spread into the 4th of July, that worked. We've just been really killing it in the Moxie room. And the other thing I said is, okay, so the market was immensely, so just here's the short that I want you guys to see if you can go back and look at this, because I said, hey, how is this actually going to unfold? Like, how do we actually get a bull run into the 4th of July? Because what I'm looking at in through here is when I was making that video, I was like, first of all, looking at it back here, how are we going to keep pushing up here? And so first of all, I said, yes, we need some sort of pullback. Okay, we got that pullback. And then the market jumped up once we had the resolution. Okay, but then we are up here. I'm like, how in the world are we going to pull back? Or how are we going to keep being bullish when the market is so far extended like this? We're not just going to be able to keep moving up like that. We're going to need some sort of refresh. Now, what's amazing, and it's just fascinating about the market and how this kind of stuff works, because you can see here that the S&P did have one little dip here, and for the most part, it then digested right here. You can see in this whole area that basically the market just digested those big moves, and that was enough. That sideways movement was enough to build enough room so that when news came out, it was like non-farm payrolls and whatever, that they were able to jump up and goose it. And maybe it was even the big beautiful bill that was starting to pass, and who knows what. There could be a few factors as to why the market jumped up like this on the 4th of July or leading up into the 4th of July, that kind of thing. But if you really look here, and let me just show you the NASDAQ, because the NASDAQ and the SMH and all that kind of stuff, this really did do the move that I was expecting. I was expecting more of a pullback, and that's where I was saying, hey, we need to go down before we can go up into the 4th of July. And you can see here, once the new quarter and the new month, July, started, that's when they dropped it, because the hedge funds, the big firms, they wanted to keep everything propped up so that they get in the quarter, nice window dressing. They wanted their books to look good. They wanted to get their bonuses. They wanted to show good performance. So they kept the market propped up kind of beyond its will. And then once they had a new month and a new quarter, then they could drop it. And that was the drop, that was the dip that allowed the market to then rally into the 4th of July. And I said, buy the dip. I told all my subscribers, buy the dip. And that's what we did. We put on a put credit spread and the market just went up. We got 100% out of that thing. We closed it for, we just let it expire for max credit and all that kind of stuff. But I was very clear to everybody. I said, buy the dip. This is the thing that's going to send us up into the 4th of July. And it was fantastic. So that was cool. Anyway, let's kind of go back here. And so I'll show you the futures as we walk through this, because if you look at let's start with the SPX so that you can see context. We ended on a massively bullish note on Thursday, or whatever half day, I think it was Thursday half day for the 3rd of July. But now we're getting really frothy. We're way, way, way up here. And I wanted to see, is there any kind of clue for what I have been talking about? And I told the Moxie subscribers, I said, hey, I might actually want to start shorting this or put something on some play with the idea that the market comes down. Now, I was a little bit late to this, but you can see here, at least according to the futures, here was the 3rd of July. Big, big, big move. And look, now the futures are all the way down here, basically where they started Wednesday, the 2nd of July. So that tells me that that was exactly what we expected. There was going to be a move up into the 4th of July. It was probably going to be too much, overdone. They're just going to say, rah, rah, America, let's go. Everybody have a nice weekend. And then they'll drop it next week. And that's basically what I'm seeing. So we're going to have to wait and see how much damage this is going to do. As I said, I've already taken significant profits leading up to this because this is the kind of thing that I was expecting. And I think that we should be expecting some more weakness into the future. I don't know how long it's going to last or what this is going to look like, but I just figured there's no way that the market can keep moving up like that. So I'm going to be looking for downside stuff. Now, the other thing I wanted to show you guys are kind of these forced Moxie price triggers. As I go through the indices, I want you to understand and look at the hourly chart, because this is where I think that the Moxie indicator is kind of telling us, like, hey, yes, the market moved up, and yes, the Moxie indicator fired, but it was kind of a forced firing. There wasn't really the greatest setup. And what I mean by that is you can see here price was down and the Moxie indicator was down. There's no real setup. There's no divergence. And divergence is how the Moxie indicator works. You want to see basically price down and Moxie indicator up. There's none of that. Price and the Moxie indicator completely followed each other. If this is something you guys don't know, if this is like uncharted territory for you, this is where you come into the Moxie room. We've got that special $197 a month. You can just check it out, and then you can start getting your feet wet about the Moxie indicator, and you can learn this stuff. And so anyway, the Moxie indicator fired late, like that. It should actually, a proper setup would have been better if it could fire back here. And so it fired late, and there was really no setup here. So this is why I think that we're starting to see some indications that this market was kind of pushed up and forced up, not on really great fundamentals and all that. It was basically that, yes, things were getting pretty soft in through here, and then the resolution of the Iran-Israel war caused this thing to move up like that. So everybody's like, oh my gosh, great, we avoided World War III, we're going to go buy. And so everything jumped up like that. And you can see here the Moxie indicator was very, very far below zero. And then simply because of the news, it shot up like this and it caused it to go fire. But also I'm looking at this. This has been an absolutely heck of a rally. I mean, great. We definitely benefited from it. But this is unsustainable. We should be very, very careful that there's going to be a pullback after this. And then really the question is, what does the pullback look like? How deep is the pullback, and for how long is the pullback? And here's the IWM. This did a little bit better as far as the Moxie price trigger kind of came down in here, but same thing, we were up here at extensions. And if you look left, we were right back here into a very, very big resistance area, price congestion level. That's for the IWM. And even if you look at the Dow, I mean, look, this is fantastic. It's been a great couple of months, but it's been a great few weeks. This has been fantastic. But we also need to realize when it's time to press to the long side and time to actually be, to take profits and be careful. And this is the time to be careful, because look at the Dow. How much further is it supposed to go up there? That is crazy high. And you can see it's coming right back up into a previous top. So sure, I think eventually we're going to keep going higher, but maybe not right here. So I do think we need to be cautious in through here. So that's the Dow, and you can look at the SMH, the semiconductors. Yes, they were strong into the 4th of July, but again, yep, we're making new all-time highs, which is fantastic, but we're right up there. I mean, yes, we technically made new all-time highs, but we are also coming up here into a previous high. It's probably going to be some resistance, and this thing is just sky high. It really is. It's just absolutely sky high. So we have that. And then if you look at ARKK, just another way of looking at this, I mean, amazing. It's making new highs and all that kind of stuff. But you can see here, it didn't make new highs on Thursday. It actually started to kind of top out and flag. And this is what I think, that we've come up here, we've reached some resistance, and we need to either go sideways or most likely we're going to come down a little bit. It is unlikely that price is going to continue to stay up here and keep pushing. I just don't see that happening. I think we need a refresh, which is great. This is fantastic. The market can't just keep going up forever, and I think this is, at least timing-wise, one of those things where I'm starting to look at this and say, hey, the market has done an absolutely incredible job. I mean, you look at this even with the FFTY, which is the IBD 50, you look at that, that is an unbelievable run. Like, go pat the market on the back. Great job. But at some point, we need to be careful in through here. And that's what I'm starting to see, is maybe some price up, Moxie Indicator down, some negative divergence, and we're also coming into a previous high and resistance. And, it's just been on an absolute tear. So I think the market is due for a rest, due for a little bit of a pullback or something like that. And another way to look at this, if you come over here, and if you look at this is breadth. This is the number of stocks over their 20-day and their 50-day. They are basically maxed out. These indicators don't go much higher than 80%. Yes, of course they can go 85, a little more, something like that. But for the most part, when they both reach 80%, we tend to get a pullback. And you can just look last time. Look at the last time that we got that. And we got a big pullback, didn't we? Now, we were able to buy the dip and everything. But yeah, I think that everything is pretty much topped out, maxed out. And of course, yes, I think the market will continue to go up at some point. But I think right now is a really, really good time to expect that the market might need to slow down, digest, and kind of reset. So then let me show you the VIX. Because, this is the VIX, and what I'm starting to see is the VIX and the SPX should be inversely related. So basically, one should go up and one should go down. But what's happening is that the SPX continues to go higher, but look, we're starting to put in a double bottom on the VIX. Okay, that's concerning. And you can see here's your double bottom, here's your positive divergence on the 15-minute time frame, and the Moxie indicator is about to fire. Oh, and in fact, actually, let's see, what day is this? Okay, so let's see what the day. Okay, that's kind of interesting that the VIX actually popped up on the 4th. I might have to look into that a little bit. Right there. I'm trying to see what date that might be. Because it's a holiday weekend, it might be acting a little bit funny. Yeah, the 4th of July. So you can see there, like I showed you with the futures came down and the VIX came up. Okay, so that's exactly, I wasn't able to see this close enough until just now. That's exactly what I'm talking about. The VIX all the way back up here from a double bottom. Yeah, the VIX is starting to, and that's evidence right there, that the VIX is already starting to show that we should be careful on the downside for the market because now the VIX is starting to pop. And if we look at the UVIX, I don't think I'll see this in the overnight, but you can see here that it has just been, it kept getting pushed down. Now we've got our Moxie price trigger. You can see the divergence here that we have, and basically I'm expecting on Monday that the UVIX is going to be well over its 15-minute 50 and probably over the hourly 50. So if the UVIX goes up and the VIX goes up, well, the market's coming down. And I think that's what's going to be happening. Okay. So again, plan for it. Remember, we took profits. These are all the profits that we took: 46%, 11%, 40%, 272% on Robinhood, 11%, 69%, 34%, and 2% on INQ. Some of these are leveraged ETFs, so that's why we see such big numbers. Those are not even options, guys. And we made some really good options trades with the SPX. Okay, Bitcoin miners, all that kind of stuff. Let's talk about that. They are looking good. Let me kind of slide this over to a different here. They are looking good, and I do think that Bitcoin, Ethereum, all that kind of stuff, I do think that they're going to start moving up. But again, they trade with the market. They are most likely not going to buck the trend of the market. So I do think that this is a bull flag, and I do think that Bitcoin is going to go higher, but it's probably not going to do it while the market is pulling back or correcting. Okay, so we are long Bitcoin, we're long another Bitcoin miner, and we're long MSTR through MSTU and stuff like that. And I'm expecting to take a little bit of heat, so I plan that accordingly. But yes, I like what's happening through here. But I think we need to still be a little bit more patient until the market really says, okay, we can keep going, because it's unlikely that Bitcoin's going to go up if the market's going down. Okay, just be aware of that. And if we look at, let me just do ETHE as far as the Ethereum ETF. I'm seeing some stuff in here And there are some things that I want to wait till Monday to specifically talk to the Moxie traders about. So if you guys are interested in what I have to say about Ethereum specifically, because I'm seeing some stuff as I do with my research and looking around, I'm seeing some stuff here that I want to be able to tell the subscribers and how we can actually take advantage of this. Okay, but what I will show you is this is a typical Moxie pattern, a 50, 250 maneuver. And so far, it looks like it's going to hold. I'm still waiting for a little bit of more proof and evidence. And even if this thing wants to kind of wiggle around in through here, I think eventually it's going to go higher. I think that the low is in for Ethereum. And now I'm just looking for these pullbacks to start holding. So yeah, I think Ethereum's going to be working. And if you want to see some of the Bitcoin miners that have been working, I know in the last couple market update videos that I've made, I said, hey, Mara, yeah, most likely going to bounce around and through here. It's going to hold, and we're going to see it come up here. Sure enough, there you go. Mara, straight up, doing very, very well. How about Irene? This is one. I actually didn't think it was going to be quite this strong, but I said, yeah, I think the Bitcoin miners are going to be doing pretty well. And Irene was one of the leaders. Irene was doing great all the way up here when some of the other Bitcoin miners were still trying to kind of get going. And then once the rest of them got on board, look at then what Irene did. So just another example to show you guys in huge volume coming into this stuff, that these names are really working. Bitcoin and cryptos, Bitcoin miners, they're doing well. You can even see Riot also doing well. Again, I wouldn't be chasing in through here on these names. I do think that we're going to be taking a little bit of heat on the trades that we have, but I think that once these things settle in, I think that the next trade is going to be in the crypto, Bitcoin, Ethereum type stuff. So come on over to the Moxie room and you can understand the trades that we'll be taking with that. Now on that note, maybe a little bit of a rotation out there. I know gold has been a huge play for a long time, and I was honestly a little surprised when gold kind of did this up here, because I was expecting gold to actually kind of start wearing back down through the daily 50 back here. It took a little bit of a detour, I think, because of some of the conflict and the stress that was happening in the market and geopolitically. So gold still found a little bit of life through it, but now look what we have. Now we have a Moxie price trigger on the daily chart, and I think the next thing we're probably going to be seeing is price actually falling and failing the daily 50. So I think that's going to continue to move lower. And if you just look at the higher time frames, if we bring this over, this is the weekly and the monthly. This has been an extraordinary run for gold. Okay, great job. But I don't think it's going to last. I think that this is overbought. I think it's very extended. And I think at least the next thing we should be looking for is probably price and the weekly 21 to meet. Okay, so I think what happened is it just double topped in through here. And I think we're going to start seeing some more softness in gold because, you know, if this market, I understand there's going to be a market pullback, but if this market continues to be strong, we're in a new bull market. The S&P made new all-time highs. What's the case for gold? Why do people want gold, especially after gold made a ginormous move like this? The risk to reward I don't think is there anymore for gold. So if that's a thing for you, I think people are moving away from gold and back into equities. Okay, Tesla. Nothing to really show on the charts except more news about Elon and the America Party. So I just started hearing about that over the weekend. I have no idea what's going to happen with Tesla in through here. We did get stopped out, and for now, hey, Tesla, for me, it's on the shelf. I'm not trading it right now. Maybe it's a little bit too volatile given what's going on with Elon and now trying to get into the political spotlight. I don't know, but I would imagine the company is looking fine. I think the future of the company is fine. They got the robotics, they got the robotaxi. I do think that the company is positioned well for all that, but I think investors can get a little bit skittish when, say, the leader of the company starts getting into politics and starts being very vocal. So I think that there's this push-pull between, wow, I think the company is going to be revolutionary, but also the main founder CEO is kind of ruffling feathers, out there. So that's kind of my thought about Tesla. We'll have to see which one actually pulls through. Can investors stay the course and stay with him and continue pushing price up at some point, despite whatever him being political happens to be. So that's kind of my 2 cents on that. Okay. And let's see, Hood. There's Robin Hood. Now, for those of you who have read any stock trading books, Jesse Livermore, this is one from the back in the early 1900s. He's world famous. If you guys ever want to read one of his books, highly recommended because he's one of the legends, one of the greats. And he had a thing called the century mark rule. Basically, every $100 or every 100 points, that tends to be a round number, so round numberitis. and it will act as both a magnet and as resistance. And Robinhood, announced a few new things with crypto and a couple other stuff, and you can see big volume, and it definitely shot it up here, but look where it went, exactly to $100. So I think that for now, $100 is going to be resistance. I do think that the market is going to start pulling back. I think Robinhood has definitely jumped up significantly. And if you look here on the monthly weekly, it is, I mean, of course, it's been doing great, but I think it's getting really, really extended to where I'd be very cautious up in here. If you're a long-term investor, fantastic. Probably keep hanging on to this. It's doing great. If you're a shorter term trader or you're looking for opportunities, hey, I think you should expect this thing to come down, settle in, flag, build a base, something like that. But I think it would be hard pressed to think that this thing is going to keep going up and up and up like this into the future. So a couple of reasons just to say, you know what, it would be great to see Robinhood take a little breath, take a little breather, anything like this, just a few weeks, maybe a little bit of sideways to digest this, and then maybe we can get the next move to the upside. Okay, you can even see along the way there was a flag, there was a flag, there was a flag. So I'm just saying it's due for a flag and maybe a little bit longer term of a flag. And hey, maybe that means it comes down a little bit. Okay, so just making sure you guys are understanding about that and kind of some plans. Okay, so thanks again for your time. Remember, if you guys are interested, check out my YouTube channels, and then over here to come over, we're running this like very special opportunity, $197 per month. Usually it's per quarter that we charge, and you guys come in here and you can see everything that I do and how I teach, and you can start getting ready for how to handle this market if it does start to pull back. Okay, thanks again, guys, and we'll see you soon.